Hey guys, welcome back to another exclusive podcast from IronFX. At IronFX, we're dedicated to bringing you the absolute best trading education to help you take your trading to the next level. In today's podcast, we'll be talking about what is the hidden RSI level. All right. As we know, RSI is called the Relative Strength Index, right? So the RSI indicator, for those of you guys who are hearing about it for the first time, right, is an oscillator that basically fluctuates between 0 and 100. Okay. When it is, so you can imagine 100 is close to the top and 0 is close to the bottom. It tends to just kind of fluctuate, move up and down between these levels. Okay, so how people traditionally use the RSI is, when price is close to 100, right? You say that, all right, it's time for it to come down. And when prices come to, oh no, when RSI is close to 0, we expect it to go up, which means price would bounce. Bounce meaning it's going to go up too. All right, so this is the traditional way, and most people use the traditional way to trade the markets without knowing of this advanced approach to trading the RSI, which I learned back in my days in the institutional research firms. All right, so just imagine, right, the usual way that people, the usual key level that they watch out for is 75.25. All right, meaning that once price crosses above 75%, once RSI crosses above 75%, they would say that, all right, price is in an overbought territory. Too many people have bought it, right? So it should be reversing pretty soon. All right. So that's what I mean by overbought territory. We should be expecting price to start a sell off, and no RSI, price to start a sell off with RSI dropping and price dropping. So when price drops below 25, right, that is where I say that it is oversold. The RSI is oversold. Now is the time where it might start to bounce up, and conversely, price will also bounce up along with RSI. So that's how most people use it. Now, how do you find the hidden level of support and resistance on RSI, which will help you, much likely, like I've experienced, be able to forecast reversals a lot better, right? The trick to that is actually to use this thing called adaptive levels, meaning what you want to do, right, is to look at the past five reversals, major reversals that happen on RSI. Sorry, the past five major reversals that happen on the prices, right? That means if you're trading euro dollar, you want to look at the chart and see where the five big previous reversals that happen. Then you look at the RSI. What you do is you look at the top of the reversal, all right, the very, very peak of the reversal, and you draw a vertical line that goes all the way down. Okay, so it kind of intersects your RSI too, right? You draw it right across the entire screen. You do this for the past five times, price did a very nice reversal, meaning what I'm calling a bearish reversal. Once you have drawn this vertical line five times across the past five times it has happened, what you then do is look at what level, what exact level it had coincided with the RSI. So you might notice that the RSI tends to rise to maybe like the 85% level. And each time it reaches the 85% level or around that level, it tends to reverse. That means that the hidden level of the RSI is 85%. Most people will be trading 75, you would be trading 85, and that will make you more accurate in forecasting the reversal, because the purpose of the RSI, a lot of it is really to forecast when reversals are going to happen in the overbought and oversold zone. Just that most people, they decided to use 75.25 as a wild gauge, right? As a random gauge. No one in the world ever said 75.25 was the correct level to use, right? So instead, what I call the adaptive approach, the true RSI, is really to look at at what level the market has been reversing at. And from there, you reverse engineer and say that, all right, the past five times we saw a nice reversal on price, RSI was actually at 85, not 75. All right. So that will give you a good idea that, this market has a hidden, or rather true RSI level of 85. It differs from market to market. It differs from instrument to instrument, and it differs from time frame to time frame. right? So you need to apply the same approach every time you look at a different instrument, or even if you just change it from the 4 hour chart to the 1 day chart. Okay, so that is a trick to actually finding the true RSI, or as you call it, the hidden RSI, right? You need to draw a vertical line on where the previous, at least minimally, 5 major reversals happen. See at which level it coincided with price and with the RSI, and then reverse calculate which level are we specifically looking at. That will help you find your hidden RSI level. And the next time, right, the next time RSI reaches that level, there's a high chance that we might see a nice little reversal on price too. And that's how you use the hidden RSI level to trade. All right, guys. Anyway, that's it from me for today's podcast on how you can find the hidden RSI level. All right, do remember to subscribe to our podcast, as here at IronFX, we're dedicated to bringing you the very best trading education to take your trading to the next level. Until then, stay safe, trade safe, and peace out, guys.